once again. So we're going to go ahead and go straight into the preparation of our income statement or our trading and profit and loss account. So the name can be used interchangeably. So the first thing we're going to do is to actually identify what will be in our income statement. This information will be coming from our trial balance. Now your trial balance will show all of the figures, the balanced figures from your leisure accounts. So some of them will be used in the income statement while others will be used in the balance sheet. So we have to be careful and identify the ones that will be in the income statement or the trading and profit and loss account. So the first one that we're going to have in it, so we're going to go line by line, is the carriage inwards. Now carriage inwards is the cost to transport in your goods, so it will affect your trading. So I'm going to just highlight that with and fill it with a color. So all trading will have that color. Now wages and salary is also a part of the income statement, but it is more of the section dealing with your profit and your loss. So we're going to highlight that as well. Your rate and return also going to be a part of your profit and loss because that's an expense to your business. You're going to be paying insurance as well as rate. Discount allowed is an expense because you allow your customers to pay less on what they owe you. So that's going to be an expense. It will be in the income statement. Discount received will be a part of the income statement. However, discount received is a revenue, not an expense. So I'm going to color it using another, highlight it with another color. Alright, my bank is not a part of the trading in the business or my profit and my loss. Bank is an asset to the business. It's owned by the business. So that will be a part of the balance sheet and not the income statement. So I'm going to skip over that one. Cash, also an asset, will not be in the income statement. Purchases is a part of trading, which is going to be in the income statement. So let's highlight that. So it's a part of trading. So let's use a color for that one. Sales, also a part of trading and will be in the income statement. So I'm going to highlight it. Rent received is a revenue earning for the business, so it will be a part of the profit and loss section. So I'm going to add a color to that one as well. Return outwards, your goods that you bring back to your suppliers, so it will affect your trading. So I'm going to highlight that one for the trading section. Stock, this is opening stock, and how I know that it's opening stock is based on the date. Now I'm asked to prepare a trading and profit and loss account for December 31st, 2001, and this is saying the 1st of the 1st, January 1st, 2001. So what this is telling me that this is my starting, this is the amount of stock I started with. So that's my opening stock. So this is going to be a part of my trading. Debtor and creditor, these are a part of my balance sheet, and so they are not necessary. They are not needed. So I'm not going to put them in my income statement. So I skip over motor vehicle, land and building, drawings. These are all a part of my balance sheet. These are assets or liabilities, as well as the reduction in your capital figure, which is drawings. So you're going to leave those. Advertising is an expense. So let me add a color for my expense. So I've gone through and I've highlighted our items that will affect my trading accounts as well as items that will affect my profit and loss section. The last thing I look at is my additional note. Now the additional note will put that I need to prepare my income statement, as well as it will add the stock. Now the stock that is there is for the 31st, same date that is there for when I should prepare the document. So this will tell me that this figure here is my closing stock. That's my closing stock. Now, closing stock figure can be found both on your income statement and on your balance sheet. Your balance sheet, because closing stock or stock is an asset to your business. You have not sold them as yet, and when you sell them, you make earnings from them. But the reason why I put it on my income statement is because I need to take it out. Closing stock will not be a part of the calculation of my profit for this period, for December 31st period. So I will have to remove it. Alright, so now that I've identified all of the things that I need to have in my income statement, and I've color coded them so that I know that all of these are expenses, these two will be a revenue, and then the others will be a part of my trading account, I am going to go straight into it. So the first thing I'll do is write the name of the proprietor. After I've written that, I am going to put in the name of the statement. So I'm going to write income statement. As stated before, your income statement is the same as your trading and profit and loss account. Income statement for the year ended, and we're going to state for which period. That's what they said, December 31st. I'm going to write December 31st. So December 31st, 2001. So I have placed my heading there, the name of the organization or the proprietor, and then the statement name, which is income statement, and the year or the date that it was done. Now there are 3 columns, and since I'm dealing with money, I'm going to have to put in my dollar symbol. The first thing I will always have in my income statement is my sales. Now, in this particular question, there's no return inwards. And because there's no return inwards, I'm going to put my sales figure in the last column as my total column, right? But if there was any form of return inwards, I would have placed it in this column. And then I would have my return inwards. Put my return inwards in, and then whatever answer I get here would be called my net sales. That is if I have a return inwards. But in this question, I do not have any return inwards, and so this is not necessary. It means that my sales figure will have to go to the last column because there's no adjustments that need to be made. So I'm just going to remove this, remove that, and we're going to just take our sales figure, put it in. Alright, so I have my sales figure in. The next thing you have in your income statement or the trading and profit and loss account is your heading less cost of goods sold. I'm going to underline and ensure that this is bold. So cost of goods sold is actually my cost of goods available for sale minus my closing stock. But in order for me to find my cost of goods sold or my cost of goods available for sale, I will have to do some working out. So the first thing I'm going to start with is my opening stock. My opening stock is the one on the trial balance, so that's 7,000. So normally it's in the second column, no worries, just straight to the second column. Then I'm going to add purchases. Now because I have return outwards and I have carriage inwards, I will put my purchases figure in the first column. So at this stage, we're going to add the carriage inwards. Now, if it has carriage outwards an expense, bringing the goods to your customers. So we're going to add this figure. The total we're going to put below it. Go ahead and we add them. Now we have our return outwards, so we're going to have to less it. Return outwards where the we brought back goods to our suppliers, so we're going to have to less the amount that we did actually bring back to our suppliers. Once we less it, the figure that you get, you will put it in the second column. So we're going to less. This figure is known as our net purchase. All right. When you add your opening stock to your net purchase, you are going to get what is called your cost of goods available for sale. So in order for us to find the cost of goods sold, you have to find this figure. And you get $118,000. All right, so this is called our cost of goods available for sales. So we have that figure. The next thing is that we have this available for sale, but we did not sell all of it to get this fund. We actually sell a portion of it because we have closing stock remaining. So what we're going to do here is that we're going to less our closing stock figure. Now when you less your closing stock figure, you put it immediately below the cost of goods available for sale. So that's 6,500. So we're going to less it. So let's underline to show that we are lessing. And then once we less that, we will get our cost of goods sold. Now what I will do, it can stay in this row, but I prefer when it is immediately beside it because of the fact that it is the cost of goods sold. So it needs not be in a row by itself because this figure is this amount. All right. Okay, so we're going to be lessing the cost of goods sold. It says less, so that's what we're going to do. So let's underline it first to show that we're going to be doing a calculation. So we're going to less from sales the cost of goods sold figure. So that is in J13. Once you less it, so let's look. So you have J4 minus J13. So I want to point out some things. The words that we have before will also help us. So for less cost of goods sold, all of this that we calculated right here is to help us to find the cost of goods sold. Cost of goods sold is equal to cost of goods available minus closing stock. Cost of goods available is equal to opening stock plus purchases or net purchases. To find net purchases, it is equal to your purchases plus your carriage inwards minus your return outwards. So each of them you're finding things, but you use the words at the beginning to help you. So like for example, add carriage inwards. So that's why we added the carriage inwards. It says less return outwards. That's why we less it. And then you get your net by doing the less. Then you add what was purchased, what was returned, what was we added carriage inwards to get net purchase. You add that figure to your opening stock to get your cost of goods available for sale. Then you less your closing stock. So this figure that I got here, it has a name, and that is my gross profit. So my gross profit will tell me how much money I have after I've taken out what it costs me to sell the items that I have sold. All right. So we're going to go into the next section. So I've completed all of the ones highlighted with the pale orange. So we're going to go for the darker orange, and those are our revenues. So the first thing we do is to add our revenues. If there's no revenue, then you can ignore this and leave, or basically leave out this section. So we're going to bold that to show that this is an heading as well. So we're going to have our first set of revenues. There's only two, and that's discount received, rent received. The figures are we're going to put them in the second column because the total will be needed in this row to be added to the gross profit. So we're going to have enter them. But I want to point out to you is that your receive will be on your under your credit column, because these are earnings, so they're increased in your capital. What we learned previously in some of the lessons that we have done, especially on the leisure accounts and the preparation of your trial balance. So these are going to increase your capital, so they're going to be on the credit side. So we're going to add them together. So let me just underline here. Let's just put the figure here that we added. And this will be called total revenues. So as I said, if there's no revenue in the question, then this section will be eliminated. So we have gotten our revenue. Now that you have found the total revenue, we're going to add that figure, because we did say we're going to add revenue. So we're going to underline it and we're adding it to the gross profit. So that would be H18. So I'm going to correct it. It should have been J18. Add it, and this is my figure after I've added my profit that I've gained from my gross profit and the revenues that I've earned throughout the year. So I'm now going to do my less. I'm going to less my expenses. This is also a heading. Now there's no name for this figure at this moment, so we're just going to leave that area blank. Our expenses, cost that is incurred because the business is in operation. Because you're in operation, you're going to be paying persons, you're going to be paying utility bill, you're going to be giving discounts. So we have all of these in green, so we're going to put them in. And all your expenses are normally debited because they decrease your capital. So I'm just going to write in the names. Discount allowed and advertising. So I'm going to add the figures in the center, because if I put them here, it would mean that I have something to add them to in the second column, and I don't have anything. So that's why I'll put them in the second column, get the total, and add it to this amount. So I add to the second. Let's see, the wages figure is 23,000. Rates 5,200. Discount allowance 250. And then advertising 2,600. So I'm going to underline this to show that I'm adding up, and the figure I'll put in the last column. So let's use the formula sum. So this is called our total expenses. And put in my underline. And then I'm going to, as it says, less expenses. So I'm going to less this figure from the total above. So as I said, the terms that are used will help you to know which one you're actually going to use. So this is called your net profit. So let's just minimize this a little so that it looks more organized. Just put in some columns. Alright, so this would be our income statement. So you start off with identifying what are the things that you will be putting in the income statement as opposed to what would be in the balance sheet. So the ones that I've not highlighted, they will go in a balance sheet with the exception of my stock. I didn't highlight it. It will also be going there. So that's what's the left, what's balanced on my stock. So I go about putting the name of the person, income statement for the year ended and the date that I'm supposed to prepare it for. Then I put in my sales figure. If there's return inwards, then I would have put my calculation in the second column, and the answer, the total, will be placed in the third. Less my cost of goods sold, opening stock, add purchases, add carriage inwards, less returned outwards. Then when I do all of that, I get my net purchases added to my opening stock to get my cost of goods available for sale, less closing stock, because the cost that I incur now does not have my closing stock involved, so I'm going to have to less it. And this sales figure has nothing to do with the stock in my closing inventory because we have not sold these as yet. So we're going to less that, and that's going to give me my gross profit. After I've less those figures, I'm going to add my revenues. And as I said, if there's no revenue, we'll go straight to less expenses. So you add your revenues, you write them in the second column because the total needs to be added to the gross profit. So you're going to put it in the second column, add it together. That's called your total revenue. Add it to the gross profit. This figure has no name at this moment, and so we're going to leave it as is. Then we have our heading. As it says, we're going to less it. So whatever total we get, we will less it from the figure above. So we have the wages, rate in, discount allowed, advertising, added together to get the total expenses minus the total expenses from this profit figure that I have here to get my net profit. So net profit is equal to gross profit plus revenue minus expenses, and that's what we have done. So thank you for listening.